Okay, yeah, thanks Chrissy, and thanks to the RIU for the invitation to present here today. So Falcon Metals, we're a Victorian-based gold explorer, and we have a very large ground position in Victoria, as Chrissy said. And I really just want to leave you with two messages today. One is we are a very active explorer, and you don't find big ore bodies if you're not drilling holes, and we're doing plenty of that. And we're also quite well funded. We have nearly 14 million of cash, so we really are able to carry out our plans. There's the standard industry disclaimer. So our portfolio, so Pyramid Hill is our flagship asset. It's a very large ground position in Victoria. It's over 7,000 square kilometres in the Bendigo region, which is one of the world's great gold provinces, known for its high grade. So I'll largely talk about that today with our major air core drilling program that's been underway for quite a while now. I'll also talk about our high-grade mineral sands results that we put out recently. That was the surprise that Chrissy mentioned, so a very nice surprise indeed, so I'll touch on that too. And towards the end, I'll go on to our Mount Jackson project, which is an emerging project in the Southern Cross Greenstone Belt, which is completely unexplored greenstone belt, which is quite an exciting addition. I won't talk about our joint ventures today. We have two of them. We have the Viking joint venture with Metalhawk in Norseman, which is a gold project in Norseman. And we also have the Staveley joint venture where Staveley Minerals is earning into our two Falcon permits in the Kimberleys next to their Hawkstone project. So it's great to have other people spending money on your projects. Quick corporate snapshot. So largest shareholder, Tim Goyder. So he's there because we did spin out of Chalice Mining a couple of years ago now and took the Victorian gold assets and $30 million. We raised $30 million as well. So Tim's there as our largest shareholder, courtesy of that Chalice position. He's also put some money into the company as well. And Franklin Templeton is also a group that came with Chalice but also funded us in the IPO. And we have Goldman Sachs there that largely bought on market. Our share price is around 13.5 to 14 cents. That gives us a market cap of around 25 million. And as I said, we have nearly 14 million in the bank at the end of March, so a very nice cash position. And with an EV of only 10 million, I think with our ground position and our activity, we're pretty good value. I'll just quickly touch on the board. So Mark Bennett is the chairman. A lot of you would know Mark Bennett. He's been a very successful explorationist with multiple discoveries, the most famous of which is the Nova Bollinger nickel mine in Western Australia that IGO bought for nearly $2 billion a few years ago now. So a very well-credentialed explorationist. I think he's hovering around the conference somewhere. And it's great to have him. He lives in Melbourne, so it's great to have someone with Mark's experience to draw upon in our office in Melbourne. So we also have Alex Dorsch on the board. He's been up here a few times himself. He's the MD of Chalice. He was the MD when they discovered Julimar. But importantly for Falcon, he was the guy that originally pegged the Pyramid Hill leases back in 2017-18 for Chalice. So he's got great passion for the project and he's a great addition to the board. Katina's a new addition. She joined late last year. She's got 30 years of finance experience in the junior resource sector, so she really does round out our board skills nicely. And joining the executive team with myself is Pradeep, a very experienced company CFO, and our exploration manager, Doug Windsor, who's a Bendigo born and bred geologist, and he's very passionate about Victorian geology and making a major discovery, so much so that he pegged the ground over his own house in Bendigo, so that's dedication for you. So moving on to Pyramid Hill, this is a typical day of exploration out at Pyramid Hill. It's largely flat wheat belt country, and under the low impact exploration guidelines in Victoria, we're able to drill pretty much anywhere we want as long as we can get a land access agreement from the landowner. We've been very successful in that. We've been able to get land access from pretty much everywhere we've needed to drill, which has been fantastic. We have a really good community team in place, and they really do contribute well to Falcon, and we are a part of the community in which we operate, which is very important in Victoria if you want to get on the ground and drill lots of holes like we're doing. So just quickly on the opportunity with Falcon, the reason we have such a large ground position, this is more than 7,000 square kilometres. Look, that's a map of the Bendigo zone. You can see our dark blue licences right through the middle. We dominate the region with our tenement position. And the important thing to note is that red dashed line that goes through the middle. 60 million ounces of gold has been produced south of that red dash line, with Bendigo 22 million ounces, Fosterville 9 million ounces, and Fosterville's been the largest, highest grade gold mine anywhere in the world for the last few years now after the Swan Zone discovery, and it really did put Victoria back on the map. And that's all below that red line, but as soon as you go above that red dash line, it's all covered with Murray Basin sediment. So the old timers really couldn't get on the ground and find anything under those sediments. So it's really just been hidden, those potential gold deposits under that cover, and people haven't been able to explore it effectively. So what we've done is we've put together a very large tenement position all along the major structures north of Bendigo, and we're systematically pattern drilling air core through that sediment to get a sample of the basement. So it's pretty much like soil sampling, except you have to drill through some Murray Basin sediment. So we're putting together quite a big data set of anomalies that we're building over the last couple of years, and we're infill drilling the better ones and just progressing along. So we're still going through that active screening process now, which is very systematic, disciplined work, but also infilling the good things that we see along the way. And we literally have hundreds of kilometres of strike extent of prospective structures under that Murray Basin cover on our ground to explore. So where we're up to, so as Falcon, we've done more than 200,000, as Falcon and Chalice, we've done more than 200,000 metres of air core at Pyramid Hill. More than half now has been done by Falcon itself. We've got a huge strike extent right through the middle, where all those dots with names there, Carry, Ironbark, Banksia, they're all new anomalies that we've discovered along the way that we're doing more work on. So those are all works in progress. But we're also continuing our screening process to the south here and to the north up here where Pyramid Hill is. So today I'll largely be talking about Pyramid Hill, our more recent results. Up at Pyramid Hill here, where we put out a high-grade result recently, and also down here at Eddington, where we're also doing some work and getting some results. We do have all these other prospects here where we've put out some high-grade results over the last year or two, and if you want to find out more about those, please drop by the booth. So this is Pyramid Hill. This is an interesting place right up the north. You've got the Four Eagles catalyst discovery here. You've got two faults either side, a very interesting structural corridor to host gold deposits. There wasn't any drilling here until last year. We literally just drilled one line right across the centre there, very wide space, first pass drilling through nearly 300 metres between drill holes, and we got a result of 4 metres at 0.47 from our one of our first holes there. Not a headline number. If you saw that in an announcement, you wouldn't sort of get too excited as a headline number, but when you're drilling undercover, that's effectively a soil sample for us. So that's a very significant result indeed for first pass exploration. In fact, that's the highest one we've ever received at Pyramid Hill at the time since drilling started in 2018. So what we think is quite a significant result. So we went back and did some infill this year. We drilled in between the holes that were nearly 300 metres apart, so at 140 metre spacing. And of the 3 holes we drilled, one of them came back with 3 metres at over 8 grams, including a metre at 24 at the very base of the hole where the blade refused at fresh rock. Now that's an even better result with our second hole. So we've got 2 holes now, 140 metres apart with no drilling around them, and it's just really blue sky. So these are the best results we've ever had at Pyramid Hill. And it's only a couple of holes, but when you're drilling on such a wide grid, it is, we think they can be quite significant. So we've gone back and we've infill drilled all around this zone here over the last few weeks. We've done more than 30 holes around that, and hopefully we'll have results there in coming weeks. And just importantly, like with the catalyst deposit down here of Four Eagles, that's got a 26-gram ore body there that they're doing permitting for an exploration decline in. We've done a review of how that was discovered over the time and the releases when they came out. And what we're seeing here at Pyramid Hill at the same early stage sort of is on the same trajectory path as what the Four Eagles discovery was. I mean, we've obviously got a lot of work ahead of us and a lot of drilling to do, but to us it looks like quite an exciting new development for Falcon. And we also did another bit of reconnaissance drilling while we were there, so we got another significant 3 metres at 0.64 undercover there, sitting out on its own. So that will be a target for further infill drilling as well. But the important thing is the results hopefully coming out in the next few weeks. This is further to the south, so this is where we've also been focusing some of our new drilling. Just at the very southern tip of where the Murray Basin cover comes down, we're consistently getting 1 gram hits there, so to us that's quite significant. We've done some more infill drilling there, we're getting more 1 gram hits. Again, they're not headline numbers, but this is drilling through cover, and it seems to be the more 1 gram hits we get, the more encouraged we're getting that there could be something deeper and a long strike. So we've got all this strike extent to do follow-up drilling on. Now that horrible green colour, that's basalt cover. So it's not Murray Basin cover, it's basalt. No one systematically drilled through that basalt cover before to get to the basement. So we're doing that now with an air core rig with a special drill bit that can get through that basalt. So for the first time ever, we're systematically drilling through this area, which is only a few kilometres north of Ballarat, which sits down here, which was a 14 million ounce goldfield. So this is the work ahead of us, which is to drill through that and see if we can unearth another discovery along that zone. Now moving on to mineral sands, this was the surprise for us. So Victoria is a known mineral sands province. There's several very large deposits in advanced permitting stage in Victoria. A couple of here today, Astron and ACDC are also doing quite well. We weren't really looking for mineral sands. We had a permit out to the west that didn't really have much gold potential, we thought, but we had a big mineral sands deposit right in the middle that we don't own. That's owned by a private company called WIM Resource, more than 200 billion tonnes in a resource at 2.9% heavy mineral. So I looked at that and asked the team, look, can we do some review work here on our ground and see if there's any mineral sands in our tenement? So we did that review. There's certainly some historical work there that shows that there is mineral sands on our permit. So we organised some drilling. We did some drill holes over here to the west. We did some drilling down here. But it was these 5 holes here that really did come up with the goods. So we did 2 here and 3 up here. And we got some pretty fantastic mineral sands results. I mean, I haven't really seen stuff like this in my time in Victoria, but we got 17 metres at 10% heavy mineral with hits up to nearly 22%, and 200 metres away we got 18 metres at 5.5% with 7 metres at over 10%. Now they're very good mineral sands results. We've done all the work on the zircon and the ilmenite and the rutile. It has all the goodies that we want in there. So this is an area of focus and renewed focus for us. So we've gone back and we've done infill drilling here. We've drilled all around that CD location where we got the highest grades. You can see there all those blue dots. We've drilled those holes and we're waiting on results. So what we're trying to look at is does this mineral sands occurrence have scale? And we also need more sample to be able to do bulk test work. We need to look at the slimes content, the titanium content of the ilmenite, all the things that you need to be able to properly assess a mineral sands occurrence. So this is all ahead of us. We should get the results for all this infill drilling that we've done in a couple of weeks, so probably in June. And you can see we've not only drilled around the high grade, but we've also drilled north and south of it and sort of along this road here just to really see what sort of potential scale this mineral sands occurrence is. But we're certainly highly encouraged by the grades we're getting here, and also the fact it's a known mineral sands province. So if we can prove up something that has some grade, it could certainly be of value to Falcon shareholders. And there's just a cross-section just showing what it looks like. There's a bit of a vertical exaggeration here given they're 200 metres apart, but there's 200 metres there and you can look at those grades and the thicknesses, and it's actually quite shallow as well. And then 5 kilometres to the north, you still have it lower grade and thinner, but you still have the same, what could be the same occurrence. So hopefully this is something of scale. Again, we should have some results out in a month or so. So moving on to Western Australia, it's good to have project diversity, especially in something like a place like Western Australia, and this gives us something to do in the winter because we do stop drilling in Victoria in about the end of May when it gets too wet out at Bendigo. So it's good to have something to do in Western Australia. So the Mount Jackson project is an unexplored, undrilled greenstone belt. It's 110 kilometres north of Southern Cross, which is a mineral province in itself. We've got multi-million ounce gold deposits, world-class lithium deposit with Covalent's Wesfarmers joint venture there, and also a world-class nickel belt down at Forrestania. So there's plenty going on at Southern Cross. But to have an unexplored greenstone belt is quite something. So we've done some work here, and we've done basically, this is the same map. On the left we have the soil sampling for gold, and you can see there's a nice bullseye target, quite a large gold anomaly right in the centre there along some interpreted structures. And on the other side, the same ground, but we've done nickel, copper and PGM analysis. And where we have coincident nickel, copper and PGMs, that's a very good sign. If you just have nickel, it probably just tells you have ultramafic rocks. But if you have nickel, copper and PGMs, there could be sulfide mineralisation there. So at the moment, we're on the ground doing ground EM. We're hoping we generate some plates and some targets that we can do some drilling. So we're hoping in a few months we'll be sending out the air core rig. We'll be doing some lines across the gold targets that we have here, and hopefully we'll get some drilling to do if we generate any EM targets there. But we're certainly in the right part of the world, and this is a really exciting one because it's a completely untouched bit of greenstone belt in a world-class province, and it's not too far from anywhere. So that's it for Falcon. Look, we've got a decorated team. We've made multiple discoveries in our team. We've got a very large ground holding in Victoria that we're doing aggressive drilling on, including some mineral sands, which was a bit out of the box. And we've also got some projects in Western Australia that we're progressing. And importantly, we've got the cash to do it properly. So thanks very much.
Thank you very much for the introduction, Chrissy. Thanks to the conference organisers. It's definitely well attended, and it's great to see a lot of people here. Yes, I'm here to talk to you about Viking Mines, the investment opportunity, and the critical mineral vanadium. So just a quick snapshot of our company. We have around 1 billion shares on issue. 1.1 cents gives us a market cap of about 11 million. We're in a strong cash position, 4.4 million in cash at the end of the last quarter, which gives an EV of our project of about $7 million. And I think I'm going to demonstrate to you that that EV is not really fully representing the value of the asset that we have. The main project I'm going to talk to you about is Canegrass. That's located near Mount Magnet, about 6 hours from Perth, and about 400 kilometres due east of the port of Geraldton. We're supported by good infrastructure. The township of Mount Magnet's nearby with airstrip, regular commercial flights. There's bitumen road and gas pipeline within 20 kilometres of the project, so it's very well located. I'll also touch very briefly towards the end of the deck, time permitting, on our first hit lithium and gold project. So we do have leverage as well to exposure to a gold asset and an early stage exploration lithium project. Importantly, at the first hit gold project, we actually have a historic high-grade mine there that produced nearly 30,000 ounces at 7.7 grams. So we're looking for narrow vein, high-grade gold. Before I get into the projects, I find it important to just touch quickly on vanadium as a commodity. A lot of the time, probably 70 or 80% of the time, I have to introduce the commodity and why we see the value and why we're here to explore for this. For those of you that aren't aware, vanadium primary use is in steel as a strengthening agent, and about 90% of global production goes into steel. And if you look at the graph on the right-hand side, that the lower part, the blue section or the dark section there, is that base load of steel. And so it's got a modest sort of 1% compounded annual growth rate going forwards, which just represents the steel consumption. However, the really important factor here is the growth of vanadium in the use of vanadium redox flow batteries, so for long duration energy storage. And I'll touch on it in more detail on the next slide, but the graph here illustrates the forecast demand and increased requirements for vanadium in order to meet this technology and the energy storage which is being installed. That forecast by the end of this decade, that essentially we'll need to be looking at doubling the amount of vanadium in production. I'll touch on that shortly. The other thing is the dynamic of the supply. 90% plus of the global production comes out of BRICS jurisdiction, with China dominating at over 61%, then Russia at 17%, South Africa at 8%, and Brazil at 5%. This puts potential risks in the supply chain. If we see that the dominance and the growth of the batteries, which is going to come out of China, there is a risk that this will reduce the amount of available vanadium to go into the Western regions. And in turn, the opportunity with our project is that it's in a very friendly and stable jurisdiction in Western Australia. So just on the batteries, there's a huge growing demand for the long-duration energy storage, and vanadium redox flow batteries meet this very well. On the batteries themselves, they have no degradation, so you can fully charge them and discharge them throughout their life cycle, and you will always return back to that 100%, so you have no degradation in the capacity. The life of the battery is very extensive, 20 to 30 years, and really you maintain the value of the vanadium in that battery right through to the end. It's in a liquid form, it's in an electrolyte. Over the life of the battery, this means that the cost per kilowatt hour of the energy produced is lower than comparative batteries such as lithium-ion. Really critically, they're non-flammable. We've seen recently a whole load of issues on mobile devices like the e-scooters and things having fires, as well as recently LG putting a recall in for one of their lithium batteries that's used in the home space. So these batteries don't suffer from that. The drawback on these batteries, if you would call it that, is that they're never going to be in a mobile device. They're quite large, they're quite heavy, but there are applications that are building these batteries for home and residential use. So a 5 kilowatt battery, it's about the size of a large fridge. But for that reason, that's why they're a workhorse style battery, but with a lot of significant advantages. These are being commercially produced globally. Over 33 companies, including large companies such as Sumitomo and LG, are making them, and it's been uptaken across the world. China is leading the floor here with the largest battery, producing 100 megawatts and operating for 4 hours, and that's enough energy to power 100,000 homes. So this battery is ginormous. It's essentially a factory or warehouse building full of all the different cells that compile the battery and providing that power. Now, just back to that graph I mentioned on the previous slide, this is the really critical point. In 2023 alone, there was announcements throughout China of the construction of a series of gigafactories to produce these batteries. And the cumulative amount of output these batteries will produce will generate about 25 gigawatt hours of power when they're at full production in terms of battery production. Now, if those batteries manufacturing factories were online at this moment, producing their namesake amount, that would consume 90% of the global vanadium production as it stands today. So those charts that show the requirements in the vanadium that's due to come out, they really do reflect what is being put in place, specifically in China, for producing of these batteries. So that allows me to segue into why we're in vanadium and our project, and why we see we're going to be able to work towards feeding that demand. Canegrass is our main project, and it's been consistently delivering on all the milestones over the last 12 months or so that we've been working extensively on it. We did a whole load of technical work in the early part of 2023, culminating in a drilling program of 7,500 meters in the middle of the year. We discovered in that process the Kink South deposit with no previous estimated resource. And with the back of all that work, it re-estimated the resource, and we doubled the amount of contained vanadium in the global resource, so everything that's in the ground. The numbers in the image at the bottom on the right, that's the total amount of commodity that's contained within resource. And for context, there's about $20 billion worth of commodity value inherent within there. Now, we did define a very large amount of tonnage, 150 million tons, and that in our concept is we're looking about 1.5 million ton a year operation. That'll be 100 years mine life. It's way more than we would ever need. And we don't really recognize value. So what we undertook then was a pit optimization study. We put economics to the project. If you look at the news release from a couple of months ago, it details all the inputs. We used the current commodity pricing at the time. We saw value for iron as well as the vanadium. We applied the operating and processing costs, trucking to port, all the factors involved, and we generated a series of pits. They're shown on the image on the right. So across 4 pits, we delineated around 61 million tons at 0.8% vanadium. And that's demonstrated that we've got an opportunity to pursue here. Key thing here is this doubled our strategic objective. We set out at the outset to define 30 million tons or greater. The reason for that was we saw a 1.5 million ton a year operation would operate for around 20 years. So we smashed that out of the water with the work we completed. For that reason, we're looking to focus now on one of those pits, and this is what we'll be carrying forwards. But I just want to draw attention again that the huge value, inherent value of the commodities in this project is not reflected in our EV of 7 million at this stage. So Fold Nose, this is the southernmost part of the deposit with the southernmost pit. We're focusing in on this area. Why we're focusing on this area? Well, we've got 39 million tons of ore that sits within this conceptual pit, which generates a long mine life of well in excess of 20, even beyond 30 years. So that gives us something to start with. It's a large single ore body, up to 30 meters wide in areas, producing a single pit, 1.3 kilometers long, 600 meters wide, 180 meters deep, and a low strip ratio of 3.7 to 1. For context, in our concept of 1.5 million tons of ore a year, we'd only be taking a sort of 20-meter slice off the top of this thing for about 20-odd years. So it's a very low mining operation. It doesn't require a lot of truck and haul. It comes out to the processing side of things that we'll be focusing on. Just to draw your attention to the contained resource in this pit, 700 million pounds of vanadium. Current price is $5 a pound, so that's $3.5 billion worth of value in that commodity. And we expect that we would be able to attain more than 20 million tons of iron concentrate, exceeding 58% grade. Again, at the current iron prices, a couple of $2 billion. So this pit contains more than a quarter of the inherent resource value that we've defined last year. There are options for additional ore that we would stockpile in the process at lower cutoff grades, so that would extend mine life further. For all of these reasons, this is now our priority to follow forwards with. We only envisaged, we've done this, looking at the amount of drilling we need to get the resource from an inferred category to indicated. We need about 3.5, maybe up to 4,500 meters of drilling. That's about $500,000, $750,000 of expenditure. As I mentioned before, we've got 4.4 million in the bank, so we're fully funded to continue with that work. There is still substantial opportunities at the other deposits, but we just don't see it necessary to be focusing our efforts there at this stage. The critical thing with these types of the deposits is how you extract the value, and that's in the metallurgy. We've been carrying this forward in parallel with the project, so this is one of the consistent areas that we've been performing well in. We've submitted a large sample, over 80 kilograms, to the laboratory, and everything that's coloured in dark blue in that flow diagram there is the stages that we've completed so far. Starting at the bottom left, we produce a crush and grind, we produce a magnetic concentrate, we then roast that in a kiln at about 1100 degrees C. That liberates the vanadium, and then you can just simply leach it out using ordinary water. The bottles on the right-hand side is when we've leached out, and the reason that the yellow colour, that's because of the inherent colour of the vanadium in that oxidation state. So in that process, going from left to right, we've recovered close to 87% of the vanadium into solution. Going back to the pit optimization study, we hadn't got all these results yet. We actually did that study at about a 74% recovery. So that's further upside with those pits that we're yet to fully determine. We're now at the back end of this process. We expect within the next few weeks to announce once we've got to the final stage of producing the vanadium pentoxide flake. But when we reach that step, we will have demonstrated the flow sheet. Now, this is just focusing on the vanadium. If I just point up here, you also, after you've roasted and you've taken the vanadium out, you can then also have an iron residue. We see this as a key component in generating substantial cash flow for the project. At the moment, there's titanium within that, and that creates a bit of a penalty component to it. We're just embarking on some further test work where we're going to try and see if we can separate the titanium out, and that will give us another product again. And also, on the other side of the flow sheet, after we've made the magnetic concentrate, the non-magnetic material contains copper, cobalt, and nickel, again, potentially providing another revenue stream, and we're starting the test work on that shortly as well. Just to put us in context within the other vanadium projects in the region, so Australian vanadium are arguably the most advanced project, certainly within WA and in Australia. And they have a large resource in excess of 300 million tonnes, shown on the chart here, and they've got a reserve of around 70 million tonnes. I've positioned that we have a large resource as well, again, more than we require, and our pit optimization is showing a similar total resource around 60 million tonnes. So we need to do the work to carry that through from a resource, do the studies, and look to get it to reserve. For valuation purposes, we see today Australian vanadium is valued at $130 million market cap. Viking is an $11 million market cap. And I see the investment opportunities investing and carrying through these studies, and we're seeing positive outputs all the time, that's our aspiration of where we could seek to be. There's also another project in the region called Atlantic. They're just to the east of us. They're in private hands. I can't say much more than other than that there's some process infrastructure there we may want to look to have a chat with them about. And then there's Surefire Resources as well, a different, similar deposit, but lower grade, and they're currently capped at 20 mil. So the opportunities to release value for shareholders, well, we could, the lower capital cost option is to just produce a magnetic concentrate and look to sell that. That's a consideration that we'll be looking into. Another aspect is toll treatment and product sale. Australian Vanadium may be producing their refinery near to Geraldton, and we could truck to them and potentially strike an agreement with them. Another option, the higher capital cost, is to produce the full plant for ourselves. And then finally is the strategic partnership scenario, which is looking at speaking with our neighbours that have some processing infrastructure in place. All of these are options we look to investigate as we carry the project through the study levels. Just very quickly touch on the lithium and gold opportunity. I'll be very quick through these slides. The gold and white tenements on there are ours. We have about 500 square kilometres. High-grade gold mine operating on them previously. To the north, we have Delta Lithium with over a 12 million tonne lithium spodumene resource in a pegmatite. And Ora Banda are the tenements in green. They farmed out their tenure for $26 million. We recently completed a 1,200-hole auger program looking for lithium across this tenure. In the centre there, you can see the coloration and the targets. A very large area, 50-odd square kilometres tested here, 26 kilometres in strike length. We defined 19 anomalies, and across those anomalies, some of them are substantial in size, with reasonable numbers for soil testing at this stage. So we're looking to carry that forwards and undertake some rock chip sampling and field mapping. On the gold, again, we were doing some work on this very recently. A year and a half or so ago. The image there shows high-grade gold in the historic mine that's been extracted with the specky gold underneath. There's a number of unfinished targets that we're looking to continue on to here. So Yana's Reward, a metre at 36. This is about a kilometre away from this area. That hasn't at this stage been followed up, open north and south. And First Hit North, 2 metres at 10 grams. First Hit South, a metre at 8 grams. Both of those areas require follow-up. So it's something we could be looked to be doing. I will skip forwards to my last investment case slide. Just to wind this up, so investing in Viking Mines, you get exposure to the critical mineral vanadium, plus a whole load of other commodities. We've been consistently delivering on our key milestones and fully funded with our 4.4 million in the bank. We have a large resource which has been demonstrating performance, and we're significantly undervalued. With that, I'll close it there. If you have any questions, please feel free to drop by the booth. Thank you very much. So the last time I was presenting here was 2022.
By then, we had 784,000 ounces at 1 gram. Today, we're at 1.3 million ounces at Mandilla at 1.1 gram per tonne. So Astral's journey over the last 4 years has certainly been about resource growth. We've grown from only 116,000 ounces just at Fayetteville to 1.4 million ounces across both of our projects. Last year, we were starting to get to the critical mass that would actually support a standalone operation, and we put out a scoping study in September of last year, and that study showed that Mandilla had the potential to be hugely profitable at a $2,750 gold price. Obviously, the gold price has moved really a long way north from that today. In the current gold price environment, Mandilla is making over 100% free cash flow margin. So for those new to the story, we are gold focused, we are focused in WA, we have 2 projects, Mandilla and Fayetteville, and we are active explorers. We just finished an RC program a week ago, and we'll have another program starting in just under 3 weeks. So this map here shows Mandilla and Fayetteville. Mandilla is 70 kilometres from Cal, Fayetteville is 14 k's from Kalgoorlie. This is the heart of the West Australian goldfields. It is a very mature field, and because of that, finding large-scale undeveloped open-pit projects do become really, really difficult. Modern carbon and leach processing technology only really came about in the 1980s, and it was that change in technology that allowed this real proliferation of process plants in this region. So there's 30 million tonnes per annum of process plants just in that map alone, expanding to 45 million tonnes per annum with expansions currently underway. The scoping study that we completed in September last year demonstrated this large-scale open pit development opportunity in an area that is becoming really hotly contested for these large open pit opportunities to fill that installed processing capacity. We have demonstrated regular resource growth over the journey since 2020, and we've only just recently switched focus to Fayetteville, which is a high-grade opportunity only 14 k's from Cal. We just finished a 2,500 metre program there, and those results are probably expected in the next 2 to 3 weeks. Cash balance is good. We've got $7 million, so we're well placed to keep going with our projects. The management team here, thanks to Chris's compliment, is very capable. We've been together for 8 years. We actually get on relatively well. We have success. We took our Egan Street company with the Rothsay Gold Project all the way through to DFS and mine permitting before a successful takeover from Silver Lake Resources. From a board perspective, the board has been strengthened over time. We added Justin Osborne to the board and more recently Mark Connolly. So here is Mandilla over the local area geology. There's 4 deposits here: Thea, Hestia, Eos and Iris. It's 37 million tonnes, it's 1.1 grams per tonne for 1.27 million ounces. This is the only 1 million ounce open pit deposit in a single pit in the WA goldfields that still belongs to a junior explorer. Now, this bar chart just shows our resource growth since 2020. The last 500,000 ounces of growth came in at an exploration cost of $17 an ounce, so we're still capable of growing cost effectively. We are very focused on maintaining this trajectory of growth. The July 2023 mineral resource estimate was important because we were focused on increasing the amount of indicated ounces. We got a significant increase, a 69% increase, and that gave us the critical mass of indicated ounces, which would allow us to do the scoping study, which we delivered in September last year. So these next 2 slides are actually on the scoping study. The best way for me to highlight just how valuable Mandilla is to compare it to a similar low-grade project that the market is actually already in love with. So I'm going to use Capricorn Metals as a comparison, and then Mount Gibson project as the clear comparator for Mandilla versus Mount Gibson. Out of interest, Capricorn is valued at over $450 an ounce on an EV per ounce basis. Karlawinda, which is their project they're currently mining, is 0.8 grams per tonne. Mount Gibson, which is the project they're proposing to mine, is 0.9 grams per tonne. So first box from the left, you can see Mandilla there is forecast to be a 100,000 ounce per annum producer for 7.5 years at 1.3 grams per tonne. Mount Gibson is 150,000 ounces a year, so it is bigger for the first 7.5 years, but it's only 1.02 grams per tonne. Moving into the fifth box, financials, we pay back our debt, our peak negative cash flow of $191 million, paid back in 9 months. Mount Gibson, 23-month payback. And then if you move all the way to the far right, that last box, both projects are conventional open pits with relatively low strip ratios. Mandilla's strip ratio is 5.8. Mount Gibson is forecast to be 4.2. Now, you really need to understand the recovered grade and the associated revenue for that on a per tonne basis, because that's really important here. So Mandilla is 1.3 grams per tonne, 95.7% recovery, gives you a recovered grade of 1.24 grams per tonne. Mount Gibson is 1.02 grams per tonne. It's a 92.6% recovery. They're recovering 0.94 grams per tonne. The gold price today is around $3,500, so it's $113 per gram. You multiply 113 by that 1.24, and we're getting we're getting $140 worth of revenue on a per tonne basis. Mount Gibson's getting 106. So there's $34 a tonne of difference in revenue, and my strip ratio, albeit is 5.8 versus 4.2, that 1.5 tonnes of extra waste costs $8. $34 worth of extra revenue, $8 worth of extra cost. So there's a real advantage there. So the next slide, here we go, is pretty much saying that Mandilla is as vanilla a gold project as you can get. Simple, conventional, large-scale open pit, load and haul, simple, conventional, 3-stage crush, single-stage grind, gravity gold recovery, and then carbon in leach CIL recovery. But even here, Mandilla still presents a couple of advantages over our peer, Mount Gibson. Firstly, 93% of our ore comes from one single large open pit, which is the Thea open pit. Mount Gibson, by comparison, needs 3 open pits to get to 90% of their ore, and they have, I think, about 11 pits overall. So it is relatively more complex to develop and keep going. I've already highlighted the advantage of the recovered grade, but another important aspect is that recovered grade, we achieved that with a grind size of 150 micron. By comparison, Mount Gibson's 125 micron. It's still relatively coarse by comparison to lots of other peers in the industry. Power is the largest cost you have when you run a process plant. The less you grind, the less power you have to put in. It's a real advantage. The second one is cyanide consumption. The biggest reagent cost you'll have when you run a process plant in the gold industry is cyanide. Mandilla is forecast to use 0.3 kilograms per tonne versus Mount Gibson 0.8 kilograms per tonne. Interestingly, if we use the cyanide pricing that we had in our scoping study, at that price differential, that creates a $2.50 tonne advantage. Now, these low-grade projects, you're trying to do all of your mining and processing for about $50 a tonne because you're looking to make $100 to $130 worth of revenue. $2.50, that represents 5% of your cost base, so that is a significant advantage. So with respect to the scoping study, the Mandilla scoping study has compelling financial metrics at a $2,750 gold price. Yes, it's even much better at current $3,500 gold price. And it also screens really, really well compared to Mount Gibson's project, which belongs to Capricorn Metals, which is getting fantastic value on the market. Now, the only metric where Mount Gibson is better is scale. But at the moment, so to put that into context, their most recent update, they added 490,000 ounces out of 90,000 metres of drilling. Our most recent updates added 500,000 ounces in only 48,000 metres of drilling. I'm not Capricorn, I'm not a $2 billion business, I have a $55 million market cap. So I can't run at this project as hard as what Capricorn does, but we absolutely still have further to grow and we have a really strong development pathway. So just moving on to a quick long projection. Here we go. So this is our 1 million ounce pit in long projection. There's only 2 points I want to make on this slide. The first one is you can see that there's these white boxes on the left-hand side. That's pointing to our drilling efficiency, which is continuing to improve. So in 2022, we're averaging 97 gram metres of gold down the length of each diamond hole that we drilled. By the end of 2023, that was up to 137 gram metres. We are getting better at targeting the mineralisation at Mandilla. The second point I'd like to make on this slide is when you look at Mandilla and you look at Mandilla in location to that first map that I put up, you can go 100 kilometres in every single direction and there's only 2 open pits that are bigger. One is Northern Star's Super Pit, the other one is a Northern Star deposit called Red Hill. So we are the third largest and obviously the largest by a mile that still belongs to a junior explorer. These large open pit deposits are becoming very difficult to find and to replicate in this area, and they are becoming more valuable over time. Now, 2 slides on Fayetteville. This is our second project. It's only 14 k's from Kalgoorlie and is 50 kilometres from Mandilla. You've got the 92 million ounce super pit just to our north, 10 k's away. You've got the 3 million ounce camp, the South Kalgoorlie operations from Northern Star, only 10 k's to our south. And then you've got the 20 million ounce St Ives gold camp, another 30 kilometres to the south. There's 116,000 ounces here. It's all at the Think Big deposit, and none of that has actually gone into our scoping study. So this does present as upside. And if we were to truck from Fayetteville to Mandilla, it's going to consume 0.1 of a gram at the current gold price. So it is infinitely doable. We only started drilling here in January of last year, so it's a relatively new area of focus. The first drilling campaign delivered good results out of 4 of the 6 targets that we went for, and you can see those results on screen. So Rogan Josh, for example, we only drilled 1 RC hole there, 17 metres at 3 grams per tonne. We've only just recently gone back to drilling that project with a 5-hole program as part of a recent 2,500 metre program. Now, at Fayetteville though, we do have this high-grade Camperman target which has been the focus of our drilling. To demonstrate just how young this project is, we've only done 6,700 metres at this project, and we typically drill about 40,000 metres per annum for the last 4 years, so we haven't drilled a lot here at Camperman yet. 13 holes in 2023, 7 of those returned significant results, 4 metres at 95 grams per tonne, 21 at 4, 35 at 2, 10 at 5 and another 5 at 6. We then drilled a couple of diamond holes targeting the stratigraphy. We got another 4 metres at 12, another 1.3 metres at 9. Then we did another 19-hole RC program earlier this year. 14 of the 19 holes came back with mineralisation. 35 at 4, 13 at 4, 24 at 3, 15 at 3, another 33 at 1, 5 at 6, etc. So last week we just finished an 18-hole program. Those results will be out in the next couple of weeks, and within the next 3 weeks we'll be there drilling once again. Remember, any high grade that we find at Fayetteville will add a heap of cash flow to the Mandilla project because it's 50 kilometres away, a very easy haul. So in closing, the Mandilla scoping study demonstrates that we have something that is exceptionally profitable and a fantastic open pit development opportunity. It's a conventional gold deposit that screens really well when you compare it to Capricorn's Mount Gibson project, and it is valued at a fraction of Mount Gibson and it's actually 30% higher in grade. Our study was conservative when it came to revenue assumptions. Today's gold price, it's 130% internal rate of return. It's an $850 million net present value at an 8% discount rate, and it produces $1.4 billion in free cash flow. We have 4 years of proven resource growth at Mandilla, and we are demonstrating our ability to continue to find more high-grade growth now at Fayetteville. And we are an active exploration company. We will not rest. We will continue to drill and develop our projects. And potentially, most importantly of all, there are no peers in our region that have the scale of development opportunity that Mandilla has. These single-stage, large-scale open pit projects are becoming increasingly difficult to find. Thank you.
Thank you, everyone. Thank you, Christy. We're up and running here. Let's have some fun over the next 15 minutes. You're going to see a presentation around one of the highest grade gold discoveries in the world today, and we're very privileged to be the custodians of it, without a doubt. So I'll just race through here to the first page. How do you measure a discovery? How do I make a statement like that? Well, we've drilled about 50 kilometres into this discovery to date. The hit rate, if we take, say, the 100 gram metre hit rate and divide it by the amount of drilling, you won't see any deposit delivering at that frequency. So it's spitting out a lot of gold. It's getting better, and I'll show you that in a moment, but it's globally leading in that respect. There's a lot of other aspects around the project that we'll go through. So clearly we need to demonstrate grade. This is one of our key KPIs in the company, if you like. This is a unique proposition, and that's what sets this project apart. We're only about 3% into the way in terms of drilling out the discovery. It's a big system. It's got district scale. Big systems have big footprints. and this has that. So we've got a long way to go. We're very much at the start of the process. You've got to drill lots. We just heard that in the last talk also. So we've got 4 rigs there today drilling, a 5th coming in the next month, and then a 6th coming in September. So we're drilling and drilling lots. There's a lot of other aspects around this project that make it compelling. It's simple metallurgy, nothing different than a mine down the road. You've got to be funded. You've got to have the money. We've got about 14 million bucks in the bank at the moment, as we're just about to close a rights issue that was done at market 3 weeks ago, and we're just rounding that out. It was massively oversubscribed. We've got permits. We can drill pretty much anywhere. Keep those drill rigs turning. We own the freehold land. We knew we were onto a discovery after 15 holes. We're over 100 holes now, about 120. So we purchased that land at hole 20 about. So we knew we were onto something, 133 hectares. From a capitalisation point of view, here's what it looks like. A couple of things to point out. We're becoming more institutionalised, as you'd probably expect over the last 6 months. A lot of buying on market from some of the larger institutions here in Australia and also around the world. This is very much also a North American story for 2 reasons. One, that it was spun out of a Canadian company which owns 50.5%. That's Mawson, and Mawson's made statements that it plans to aid in the consolidation of the asset, not have 2 parts, part in Canada, part in Australia. The aim is to consolidate that into one company and have it dual listed both in Canada and Australia. And the Canadians love this style of gold. They made $10 billion on a mine down the road, Fosterville, in market cap appreciation from about 2016 to 22. So they know what they're looking at, and it's really been the Canadian market that has owned this space in Victoria where this is located. In terms of intersections, I don't really want you to look at these. I want you to focus on a few things in detail. Obviously, here's the length, here's the gold. There's a lot of gold. We've talked about that. There is an antimony piece to this story. I'll mention it a little bit later, but it's about 20% in situ recoverable value. It makes it a critical metals project. It's a very real part to the project. Antimony is one on the critical metals list of every advanced nation, and that's essentially for a defence issue, and this will be one of the key projects in the Western world to restart that supply chain. The other key point is that the top 5 intersections here have come in the last 6 months. So we're drilling, and we're drilling lots, but it's getting better. How does that look in terms of if we just did an Excel spreadsheet? This is for all the mathematical nerds out there, and maybe I'm one of them, so just bear with me for a moment. Here we have time on the x-axis. So this is when we floated the company. We're just about to come up to our 2nd year of existence. We listed in May 2022, so that's that point there. If we just did a 2 metre at 1 gram weighted average through our 33,000 assays, or 30-odd thousand assays, we can see that the average width has stayed pretty consistent at around about 4 metres for every intersection. But something magic has happened there with the grade. And that is almost reflective of the share price if you plotted the two together. It's the cumulative average has got better and better to where it averages over 25 grams. I don't want to conflate this with any resource or average grade through the deposits, the average grade of an analysis of the database, but it just shows that the grade has been improving. And why is that? Why is that? Victoria is well known for this style of gold in the blue circle here. Bendigo and Ballarat built out the expansion of the English Empire, Melbourne, and really a lot of Australia in the 1800s. And that's what made Victoria famous in that period, but rather infamous from about the 1970s onwards, when people tried to get a lot of these up and running again and they failed. The simple reason is because they have a high CV. There's another mathematical term, coefficient of variation. It's a way to measure the consistency or erraticness of any data set. And in gold we do it, and these deposits have a high coefficient of variation. What is lesser known in Australia, and the Canadians know it better because they have 2 mines operating in Victoria today owned by Canadian companies, is that there's another style of gold, completely different, formed at a different time, formed in a different space, that has a low CV. So they form nice, modern, reconcilable deposits. And when they form these deposits, this is Fosterville, which is owned by Agnico Eagle today, 100 kilometres from us, but the same style, geologically, forms the highest grade gold mine on Earth. So for the last 7 years, this was the highest grade gold mine on Earth, producing at 40 grams. It was the lowest ASIC, the lowest cost, and it was the highest margin deposit, and it was a top 10 producer. So it was producing at 600,000 ounces a year, which is a lot. We have another one of these discoveries. When you're in this yellow box, you want to go deep early because the geology just works beautifully. The geology changes and you go into a brittle, ductile regime is how we say it geologically. But all you need to know is they get very good at depth. And that's why we're drilling from, the mineralisation starts at surface and we're going down to a kilometre depth. Let's race through here, and I've lost my ability to draw on this, but you can see Melbourne. I'll just have to go back and forward here. Sorry, I've got a technical glitch. You can see Melbourne. It's just immediately north of that is just next to the M in Melbourne is the project, and you can see perhaps Fosterville is FOS, 100 kilometres to the northwest. The orange deposits are the ones that you want to go for. They're the ones that get very much better at depth. The green are the ones that made Victoria famous in the old days. So if we just focus in here, and I'm going to be in a bit of trouble here because I'm still not able to draw on this, so you're going to have to bear with me. We see our 100% owned project in the lower right-hand corner. And if we just zoom in here, we can see that there's a bunch of stars in that orange box. That's our focus of our main drilling. And just bear with me here, please, I'm just going to turn this on and off because it's going to be a much better exercise for you if you can see me draw on this. Sorry?
Had an issue with that?
Yeah.
You guys right?
Yep. No, I'll just restart it here. No, we're not going to.
We can visualise it.
We're going to have to visualise it. Okay. This will put me under a bit of pressure. Okay, so in that orange box is where we focused. The stars going out to the northeast are 10 kilometres away. Big systems have big footprints, and that's exactly what we've got. And look at that, just like magic, we've got it again. So I can now spin this around. Okay, very nice. So here we have the system extending out through here. And if we just focus in on the key part of the area, you can see in green, the green area is our freehold land. We have the key area named with all the old mines there, looking out beyond. So we've secured that freehold. And if we just zoom down now and start looking at the geology in that key area, I can just zoom that around and you can see that there's the drill holes under here. We'll talk about that in a minute. But this is the geology and this is the magic that makes it quite a targetable deposit. That low CV means that we don't have to drill as much as if you had a high CV, so it lowers your cost of capital. Having a very targetable horizon like this is very much the case. So we say that our mineralisation, looking down, is like a ladder. The sides of the ladder are like this and the rungs are like this. There's 45 rungs that host the gold, but they're always contained within those rails that extend for 10 kilometres out through here. So that's what makes it very targetable. If we were to then look and go underground, we can start to see that is in 3 dimensions there, and you can see that the dots, which happen to be the gold, are very much focused within that green rock. And you can start to see some of the highlighted drill intersections here as we show them. The yellow holes are the holes that are in the lab. So there's always news flow here with 4 rigs flowing. So you'll always see news flow coming out of Southern Cross. The rungs of the ladder going to 3 dimensions start from surface, go down to a kilometre, and each one of those is anywhere between 2 to 10 metres thick. And we can trace them, any one of those, over 600 metres down dip. And in this orientation, they're 20 to 100 metres long. So there's lots of them. Some of the very highest grades you can see there, the gram metre hits are extremely high grade. And that's what is getting people excited, because we can start to see some of those very high grades are forming close together. Those 2 red dots there are 1 metre at 2,000 and another 3 metres at over 270 grams. And that's what's exciting, because we can start to build tonnages in this project if we start drilling, or small tonnages but very high grades, by drilling around those. So that's one way that we're looking at this deposit. The other way that we're looking at this deposit is by expanding it. And so it's just very early days, as I said. If we just take off some of the areas that we know less about, and with this variable ability to draw on the screen, it's a bit harder to show you. But this is what we know a lot more about. These veins here and the deposit here are shown. There's a lot of hits outside of that, over that 1.2 kilometre trend. Now, what we know in that grey area is where we put an exploration target together. Too early for a resource, and please read all the disclaimers about that in our detailed documentation. But 40 kilometres of drilling, dealt with very professionally, top cut at 25 grams and 67 in the range. In the grey area, we have 1 to 1.6 million ounces. But the key point at 7 to 10 grams. The key point is, though, that it's only just very much a start. So you can see those green dots, if you like, going out to the left-hand side, are where we've got mines, old mines, historic mines, and these hits. And that's the area that we can start to see, and I can draw on it again now. That's the area that we're expanding into, also out through here as we find more, and down through here. So that the yellow, which I'm describing now, to the blue and that little bit of red is a much smaller area. So we can see ourselves going to 3 million ounces at that grade that we've already given you an indication of. And as we collect more information, we believe that top cut will rise. So 3 million ounces at 10 grams is on that slide. We know that these systems continue down to 2 kilometres. This is only 1 kilometre here, and remembering this slide is only 10% of the 10 kilometre trend. So there's a hell of a lot more to drill into, and you can see that we're now drilling into these areas. So I've got the 1 minute left. I think we can spin out of this and just look at that larger trend. You know, we're very much on the first parts of the exploration of this project. It's some of the highest grades that you will see in the space. It does have this antimony piece that we briefly spoke of. It was kept open during World War I, this project, by the Imperial Munitions Act. So it's a very similar exercise that was happening over 100 years ago as to what's happening here today. Metallurgically, it's free gold. Over 80% is free, so it's a simple flow sheet that we've identified. It's the same as the mine down the road, Costerfield. We have a gravity product and then a float product. So nothing too funky about that. A lot of work going to the ESG and social side, environmental side. We have 50% women on staff. We need to be a very much a first-rate mining company to operate in this environment, and that's who we are, and that's who we are going to be. So I encourage you to join us. You're going to make money out of this stock by us making it bigger, so keep an eye on the exploration results. This is growing to be a very significant project, and with that, I think I'll thank you very much.
So the managing director sends his apologies. He's too busy to come, currently in California. It's tough for some, isn't it? I'll just skip through the disclaimer. Basically, don't believe anything I say. Corporate overview for Delta, a reasonably young company. It formerly Red Dirt. We formed in 2021 when we acquired the Mount Ida project. So we've got 2 projects. West Australian lithium focused, and a very strong, robust and supportive shareholder base with you see Minres and Hancock and Idemitsu. A lot of you won't know who Idemitsu are, but they're an enormous Japanese company and very supportive. And Waratah Capital, who are in a lot of the lithium companies. Very strong board. Got Chris Ellison from Minres as a chairman. Josh, who runs a lithium business, is in as a non-exec. Steve Kovac runs Idemitsu's business over here, which is currently making $1 billion profit a year in Australia. And then James and Nader founded the company, and Tim's a a legend of the CFO circles in West Australia's gold industry. We've got a pretty straightforward strategy. So we've got 100 million in the bank. We realised that now is not a good time to be trying to raise more money. In fact, it's a very good time to be buying lithium stocks, I would say, like Delta Lithium, for example. We want to develop an operating mine, but we don't want to be in a position to be having to raise more money in the very near future. So we're moving ahead at pace. We've nearly finished our drill out of Melinda, whereby we'll have pretty much everything that will fall into an open pit into indicated, and then we'll be able to state our maiden reserves when we finish all the studies. We are open to acquisitions, so we've been pretty busy on the M&A front around Yinnithara, looking at projects that complement our current exploration philosophy at Yini. And we also have gold, which some people are interested in at the moment, and I don't know why. But we do have lots of gold at Mount Ida. So we found quite a bit of gold whilst we were drilling for lithium at Mount Ida. And I'll show you what that looks like. So I've just said all that. I won't say it again, but we do have 2 mineral resources. So we've got one at Mount Ida, 14.6 million tonnes at 1.2%. We also have about 420,000 ounces at 4.1 grams, and we found that whilst we were drilling for lithium. And at Yini, 26 million tonnes at 1% lithium. Pretty straightforward. So I'll run over Yinnithara for you. We acquired this project in, I think it was August 2022. We started drilling there in November 2022. And we've been drilling there ever since. We've got 5 rigs there at the moment. We put out the maiden resource a year after we started. It's a pretty straightforward project, right? So you have these pegmatites sticking out the ground. Really, you just go and drill them, and you just need to do it at a rate. You know, what's the end goal? We want to dig it up. When do we want to dig it up? And then we work back from there. So we would like to start mining this thing as soon as possible. It's probably likely to be 3 years with all the permits. And we've just back calculated how to do the drilling from there, and it's basically just go as hard as you can. We've been picking up ground along strike, so we've identified which rocks host these pegmatites, and we've been talking to our neighbours, and it's been a good time for us to pick things up there. Melinda, that's where most of our drilling has gone into. We've had some really awesome results recently. So probably the best result we've had to date came out a couple of weeks ago. 94 at 0.95, basically 94 at 1%. From the M1 peg, and it really is a nice big pegmatite. That's probably going to be the majority of any mining inventory we might get there in the future. But some great grades, some great widths. It's a really significant project. The M1 pegmatite is all spodumene, so it's pretty simple from that perspective. That's what this thing looks like. So it's pretty big at surface. It will lend itself quite well to open cut mining. So with a lot of our drilling, we're just aiming to increase the category of the resource, like I said previously, and we want to get that inferred material into indicated in areas where we know we can easily and quickly mine it. Other than Melinda, so we've started drilling at Jameson's. The team have done tremendously well to get in there. It's a challenging place to operate. And we've had some pretty good success from our first drilling program. I think it demonstrates scale for the project, for the prospect at Jameson's, and it demonstrates that, you know, this whole Gascoyne province, that we've now really tied up most of the good ground there, it can have potential to host other serious deposits. So this is really good news from Delta. We've got a rig drilling at Jameson's, and it will carry on drilling at Jameson's, I think, probably for the rest of the year. We're just about to finish drilling at Melinda with 4 rigs, and then we'll drop back to 2, just in line with that idea around us preserving capital at the moment when it's difficult to raise money, but still pushing the project ahead to mining as quick as we can. So as well as doing all of the geological work, and obviously I often get stuck on talking about geology stuff because I'm a geologist, we're also doing all of the environmental surveys, the flora fauna surveys, all of these things, lots of heritage surveys going on, really moving ahead with the permitting to make sure we can dig this thing up as soon as possible and make our shareholders money doing so. So another thing we've got is Mount Ida. So we did a lot of work at Mount Ida last year. During drilling for lithium, I should add, but during that same time, we also drilled quite a lot of gold. And we are a lithium company. I should just remind everyone that. But we realized that actually we probably can make some money from mining the gold, and it will help us pay for developing the Yinithara project. So 100% at Mount Ida, 100% owned mining leases, and we're actually fully permitted. We can go and start a mining operation tomorrow. The lithium resource is 14.6 million tons at 1.2%. Some people might say, well, why are you changing your focus from Mount Ida to Yinithara when you could probably mine Mount Ida straight away? It's just scale. Yinithara is much bigger. It's much closer to the surface. It's a proposition that will be able to operate in a lower cost environment than Mount Ida. So what we did, this shows you an oblique view. It's pretty difficult to look at, so I apologize for that. But basically, you have gold lodes, and then you have lithium pegmatites that cross-cut these gold lodes, and they're the green and blues. So when we were drilling all of these pegs out, we kept hitting gold, and we were able to, for free, because we'd done all the drilling for lithium, we were able to do this gold resource. And it's come out with a couple of really good high-grade possible pits. So the Baldock 86 lode will have a open pittable resource of 50 or 60,000 ounces at 9 grams. We'd also be mining about 100,000 tons of pegmatite at the same time. Meteor North, about 80,000 ounces at 5 grams. So pretty high-grade gold propositions. And we kind of know that we'll be able to make money from this and help fund the major project development at Yinithara. So very busy looking at the possibility of monetizing the gold, and we're very conscious of driving ahead and getting Melinda into a position where we can mine it. Okay, thank you very much.
Good afternoon, ladies and gentlemen, and it's great to be here at the Sydney Resources Roundup again, and thanks again to the RIU team for putting on what we all can agree is another successful event. Look, today I want to, again, like I said, I want to talk about just one project, and that's the new discovery of a large-scale, high-grade, clay-hosted rare earth deposit called Jupiter. It's located in a Tier 1 jurisdiction of the Midwest region of Western Australia. And I want to talk about its recent record drill intersections, and those include the highest clay-hosted rare earths intersection in Australia. Here's our disclaimer. I suppose the highlights have been not only that record intersection of 48 metres at over 3,000 ppm total rare earth oxides within clay. We've also got some nice peak results there, which wouldn't look out of place in a high-grade deposit of hard rock with over 2%, being 20,500 and nearly 2.7% total rare earth oxide. So we're starting to get a lot of plus 1% results, but as we do more drilling, we get more higher grade results. The other thing about Jupiter is its proximity to infrastructure and, more importantly, processing facilities nearby, one being the Aluka rare earth facility being constructed currently near Eneabba, in Western Australia. I will touch on Mount Lindesay very briefly. Curtin are doing some fabulous work on the hydromet process to extract tin and boron out of our tailings stream of the flow sheet. So look forward to giving market update later when those results come through, and Argonaut PCF were engaged at the start of this year to see if we can extract, do a strategic review and see if we can extract some near-term value on that asset. That's currently an iron ore mine that's on care and maintenance. Share price is 2 cents today. We were sort of trading around about 0.075%. Pre-Christmas, we went up to 2.9 cents recently, and you can see that spiked, and that's pretty much around our record intersection. And now it's a $43 million market cap. For those of you who don't know, there's an asset called, or a company called Meteoric, MEI. Have a look at their resource. It's 409 million tonnes at 2,600 ppm. It's in Brazil. It's sitting just in heavily populated areas, nice, lovely, green, lush farmland. And our project's quite different to that. But we have a very, very comparable project, so there's a huge amount of value there for investors going forward as we head towards our maiden resource. The board has changed recently, and certainly I take shareholders had the opportunity to meet Tim, our new chair, at the booth for 73 post this presentation. So he brings a wealth of experience. He's an investment banker, has been on boards as an executive career for over 25 years, and he has that relationships, having worked at Barclays Bank, headed up Barclays Bank, the Australian arm of that, and likewise with Morgan Stanley. So great experience, and certainly a big tick in the box in terms of supporting what we're doing at Venture and what he sees us doing going forward. We've got myself and Stuart Owen, that's the link to the past and the history of the exploration and the great successes we've had in making discoveries. And Philippa joined us back in October last year, and she's currently with an unlisted rare earth company as well. So yeah, a good blend of experience, which we will look to add further as we move along the journey with Jupiter. Like I said, Chrissy said we've got a range of projects, and certainly today I'll only be talking about the Jupiter project here in Western Australia. So we'll start that journey. Now, the rare earth, there's been a lot about rare earths sitting out there, and I'm sure you're familiar enough, though obviously it is quite complex, but it's a critical mineral. It's all part of this. Many governments around the world look at their strategic and economic importance in a transition to renewable energy, and that's the key component. But one colleague of mine did mention one day that a little bit of rare earths in everything makes it work better, and I think that's probably a good way to sum it up. But it's more about the magnet rare earths, the neodymium, the praseodymium, which is the NdPr, the terbium and the dysprosium. So those are really the key four that you need to focus on. And there's this geopolitical situation with China, as we all know about, so that feeding a different market, which is non-Chinese. Location. This is a key component of this project at Jupiter. We're just off the highway that links Mount Magnet and Geraldton. It's about 300 kilometres to the port of Geraldton. There's a gas pipeline that we crossed twice in a little journey from the highway to Jupiter, which was about 20 kilometres along pastoral lease tracks. It's then, as you can see, it's located, and we did drive this road. That's bitumen all the way past Deflector and Golden Grove up to Yalgoo. So you can go all the way to here, and then there's about a 69 kilometre trip to Inyaba. So it's bitumen all the way, about 250 kilometres. We're about 450, 500 kilometres from Mount Weld. So the great opportunities for sending our product from Jupiter to those two refineries in the future. So as well as having excellent infrastructure in terms of developing standalone if need be, but great option, and that's why the location is super important. How did Jupiter come about? Well, we found some rare earths drilling in Tasmania, in the clays. We got interested, and we found some ground in Western Australia that was vacant thanks to a geological data set from the government. And one of the highest results there, I point 1800 ppm sitting at the surface, and I'll point to it exactly as we zoom in, sitting there. So we pegged the ground, We then did a JV with a private gold company. Third-tier project was called Iron Duke. We did the JV there. This is where that soil anomaly was, which is interesting enough near the gas pipeline. We then pegged more tenure around it as we formed this JV on Iron Duke. So the JV was to spend 250 grand to earn 51%, not a $500,000 to earn 70%, which we are now at the moment. And then after that, funding a feasibility study to get to 90. So great land position. First phase of drilling happened in June last year, so nearly 12 months ago. This has been a very rapid journey for Venture Minerals here. And I'd like to point to a couple of results. One is these are the results. So this is Jupiter here. 40 odd metres, 1600 with 10 metres at 2,500 ppm total rare earth oxides. Similar result, 10 kilometres to the north, 45 metres at just under 1,500 with 15 metres at 2,100. High grade core within that broad, thick zone running around about 1,500 ppm. That's the gas pipeline just there. So just keep that in your mind as I run through the story. We then had restriction access because of the heritage agreement in Western Australia, so we couldn't drill. So what do? We did geophysics. We did mag and gravity, and the result of that at Jupiter to earn our equity to 51% in stage one was there's a gravity anomaly, here's your mag, and we drew a line around it. We called it Jupiter. So it's just a geophysical target, 40 square kilometres. We did a little bit more detailed assaying around initial drilling. We got 11 metres at 3,000 ppm, so that's 1 metre splits. Quite often we did 2 metre splits. So the story started to develop. So this is in November that Jupiter was born, effectively. We then did further RC program, 25 RC holes down to about 100 metres max. All 25 holes got mineralisation. We started getting 7,000 ppm, so the grade started improving. And now we started to see this. This is very familiar throughout every time we've announced results. 20 to 30 metres, running over 2,000 ppm within zones, play over 60 to up to 80 metres now, running over 1,000 ppm. The magnet rare earths consistently 23%. That average has not changed. Low thorium and low uranium, which is very important when you talk about the radioactive material that's being processed at Eneabba. So great to dilute that material down, make it easier to handle. So that's a tick in the box. And then we pushed forward with our stage one program and we drilled 5,000 metres quite quickly just in the month of December and announced results in February. And the first batch with that record result of 48 metres, these are the best 10 results from that program. So the 48 metres at 3,000 ppm, 600 metres away, just a mere 600 metres away, another 30 metres at 3,000 ppm. These are higher grade than any other rare earth, clay-host rare earth company has delivered in Australia to date. And you can see many of the results are all very, very similar. There's a 79 metres at 1,805 ppm, starting at 20. So obviously very good strip ratios. And, it starts getting a little bit boring, the consistency of high grade, huge widths intersection that we're getting at Jupiter. We then got some more results, and this was more of a project record. The NdPr over 5,000 ppm, great results. Starting to get a lot of results sitting above 1,000 ppm NdPr, which is obviously the most important part for the magnets. Like I said, there's a result there of 1.4, just under 1.4%. And again, just ticking a lot of the boxes. We're starting to identify some minerals which our American friends of defence are wanting to source, which is a samarium, which is used in the solar panel-driven drones that they use in defence. So samarium is a very important product, and I think our friends at Lynas are looking to work with the Americans on producing that. We then did a strategic land holding just recently to connect our mineralisation 10 kilometres to the north. The mineralisation is open here to the north. We picked up that we now direct unencumbered access to Jupiter by road, and we acquired all the remaining priority clay-hosted targets. So up to 1,353 square kilometres. Remember that, but we're only focused on the 40 at the moment at Jupiter. The latest campaign, we were up on site 3 weeks ago. There's just a few snapshots from drill rig. I turned up there. These guys have been getting 600 metres a day. I spoke to the driller. He was smiling. And the reason I spoke to the driller is because the rig had broken down 10 minutes after I turned up. So it's a typical MD spell, if you like. But that last batch of results, second, third and fourth biggest results came in that. There's a 2.7% result. But at camp, we had to race up there because we drilled 14,000 metres in 4 weeks, 2.7%, 246 holes, and we just, we punched it out very quickly. $27 a metre all up costs, and the assaying is basically the same price as well on top of that as well. So, very, very cheap, quick drilling. This has happened in a blur. We've employed a doctor in geometallurgy to work on ore characterisation of this deposit. Up on site, we're re-logging. We're doing lots of things as we're turning towards a resource. And I forgot to mention there's this cross-section running through the middle of Jupiter, and this is 7 kilometres long. And I did jokingly think about having naming the Jupiter Run for our team later on to run to 7 kilometres, but it might be, when it's in summer, a bit brutal. But there's a gyp trace of hole 71, which has that record intersection. So you can see the clays here all the way through from highly wetted clay material through into a saprolite material down into the bottom. So our mineralisation is spread all the way through that. So just a summary, 1,353 square kilometres, 300 kilometres east of Geraldton. We're only focusing on a 40 square kilometre target. We've had a high success rate here. 90% of our holes have intersected over 1,000 ppm, and 3 of the holes that didn't were ones that were very shallow, finishing the first 5 metres, hit hard rock. But sometimes the holes go beyond 100. Obviously, including that record intersection, consistently 20 to 30 metres over 2,000 ppm, within up to 80 metres over 1,000 ppm. We're getting some record numbers in terms of dysprosium, neodymium, terbium, praseodymium and samarium as well, so some pretty high numbers at the bottom there. But obviously our infrastructure, our access to infrastructure and to the Iluka and Linus plants, proximity to those is a key to the project. That's the drill rig. This is a couple of drone shot we just took recently. You can see that's the nature. It's very desolate. We are remote and yet we're close to infrastructure. There's the gas pipeline we cross over twice, and there's the gas pipeline again, and that's the road looking west heading towards Geraldton. So there's around about a truck every 10 minutes going past, doubles, mostly triples and quads. It's 3 and 4 trails each, so great infrastructure. We've completed the program, so expect the first lot of results coming out very, very soon. The metallurgical, the characterisation work being done by our geomet is the first part of that metallurgical test work. Look forward to those results. And obviously we're heading towards a maiden clay-hosted rare earth mineral estimation for Jupiter towards the middle of the year. I won't touch more about the projects, but certainly Vent Jupiter stands out amongst its peers in Australia and will be equal, if not to world scale, very soon. Like I said, we're super well located, cheap, very quick resource coming up, and that'll be it. Thank you very much. Come to booth 73 and meet myself and Tim for a chat.
Thank you, and thank you for the organisers for putting on another great event. Apologies, our presenter today was meant to be our Managing Director, Adam McKinnon, who knows a little bit more about rocks than I do, but unfortunately you're going to be stuck with me. But a little bit of background, we are a New South Wales copper and gold explorer, so this is an important conference for us. Disclaimer. And some recent changes. So in terms of our corporate overview there, you can see the kick up in our stock price recently, and that came when we actually brought in the strategic investor of FMG. So FMG are chasing copper around the world, and we have negotiated both a joint venture at project level, and also they came in as a 19.9% investor. Still, in terms of quite a tight capital structure, directors 16%, one individual 7%, Goldfields 5%, the top 20, 63%. $40 million market cap. Adam McKinnon, who couldn't be here today, he was previously General Manager Exploration and Business Development at Aurelia, and he was responsible for the recent 1.3 million ounce gold equivalent Federation discovery that they're mining soon. Stephen Oxenberg joined us from Goldfields. He was superintendent at their St Ives mine. And historically, the background of Magmatic is that we bought our New South Wales projects from Goldfields 10 years ago, and they were originally on our register when we listed in 2017. So we're in a world-class region, New South Wales. A lot of presenters here today talk about Western Australia, but New South Wales is endowed with world-class assets. Most importantly, in our region, we've got the giant Cadia mine. You can see, excuse me, that equates to about 100 million ounce gold equivalent. It's a world-class mine, gold, copper dominant. You have the North Parks mine, which we run very close to. There's been some activity in the region recently. Obviously, Newmont just bought Newcrest, and Evolution have just bought the 80% interest of China molybdenum North Parks. North Parks is Australia's largest copper gold porphyry mine. The Cal mine, Evolution, they bought that from Barrick at the same time as we bought our projects from Goldfields, and they took that from a 4 million ounce gold mine to a 13 million ounce. They've done a fantastic job. So we have 3 projects. Originally we had 4 when we listed, but in 2011 we actually spun out a junior company called Australian Gold and Copper. I still sit on the board as the chairman, and Adam sits on the board as well, and Magmatic is a significant shareholder of AGC, and they're exploring in Cobar for gold and copper. So 2 big tier 1 potential copper gold projects, being our Mile project and our Wellington North project, and we have an orogenic project, third project called Parks. Importantly, the most recent activity, joint venture and share placement. The placement that we got from FMG will allow the company to do parallel exploration. So the joint venture, we are operator for the first $6 million. So the Mile project will be very busy over the next 12 months, but we'll also be exploring our other 2 projects. So guaranteed lots of news flow coming through in the next 6 to 12 months. I think everyone knows what's going on with gold and copper in Australian dollars, all-time high, and the projections look pretty positive. The right-hand part of the slide shows you that the majority of copper comes from high-risk countries. Australia only sits down at about a 4% for copper, and the 70% of world copper supply comes from porphyries. And the 2 biggest porphyries are in our region, Cadia and North Parks, and we think we're onto another one. So that's a map. You can see red is our project, Mile. FMG own the land around us. Anglo Ashanti have just done a major joint venture with a Canadian company to the north. And down here you have Evolution just taking over the North Parks project. Lots of activity. A bit of geology. This is where we're doing a lookalike comparison with North Parks. This is a magmatic arc, and you can see both in terms of gravity low and magnetic high, there's very strong similarities between the Cal mine, the North Parks mine, and the only other area with the same signature is our Mile project. If we take it down to the geochem level, this is North Parks. North Parks is a cluster of 22 deposits. You can see both from 500 ppm, 1000 ppm, and their deposits. And Mile is very much a lookalike. So we're very hopeful that our project, which is 250 square kilometres, will actually have multiple deposits. Recently, we did our maiden inferred resource. We only drilled 14 holes to get there. And what really came about is that there was some really fantastic grades. So if you're looking at those 4 intersects, they are all at the same grade that North Parks mines. The nature of porphyries, they come in normally in hundreds of millions of tonnes and at low grade, And, we think we're on the way. Our most recent first mineral resource has 356,000 tonnes of contained copper equivalent, and we think we can increase that by the multiples with our drilling. We've recently done a lot of work on the geology. Porphyries are complicated systems. This is a brecciated system. We think we've nutted the geology, and what we've come up with is this little section here is where we've drilled Kingswood and Corvette. We've basically only drilled 10% of the defined 2 kilometre region. So there's lots of drilling to come, and we're very excited about the size and potential of this deposit. There's lots of other targets. One of the benefits of when you inherit 4 projects from the 7th largest gold miner in the world in Goldfields, they did a lot of regional work on geochemistry, geophysics, air core, and we inherited a lot of targets. A lot of those targets they largely ignored because Goldfields was a gold company and they really weren't looking for polymetallics, they weren't looking for copper. And so we're blessed with lots of these targets, and with FMG, we'll be drilling quite a few holes in the next 12 months. Our second major project, and we believe this is tier 1 opportunity, the reason we say that is we actually surround Alkane's Boda Kaiser discovery. You can see over here, they've just regraded that from 15.7 million ounces to 14.7. So it's 14.7 million gold equivalent. You can see the grades at 0.55 gold equivalent. This is our tenement boundary and our other tenement. So we are within 1 kilometre of Boda 4, and you can see we have lots of lookalike targets. Our Rose Hill target is 71 metres from surface at 0.43 copper, 0.3 gold. That's at a higher grade to the Boda Kaiser. So we think we could help enable and build that story of Alkane at Boda and Kaiser, and we've already started exploration this month at Wellington North. So that shows Kaiser, Boda, they've been drilling down here. We've just done a soils program, and this is only 1 kilometre from the end of Boda 4 where they've been drilling. Our final project is a simple orogenic gold project called Parkes. It's about 30 kilometres along strike from the Tomingley mine. Alkane have done a great job at Tomingley. Originally this was a 780,000 ounce mine, and through 3 discoveries they've added about 1.5 million ounces. We run along strike along the Parkes fault zone here, and we are currently permitting to get ready to drill both at McGregor's, Stockman's and Black Ridge. So we've got a portfolio. One of the things we've done with our joint venture with FMG, normally a junior is constrained by capital, both people and money, and you're normally just targeting one project. But the joint venture which we are operator on will run parallel, but we'll also be exploring multiple other targets over the next 12 months. So strategic partnering with Fortescue, our team, Adam came from Aurelia, as I mentioned. Stephen came from being the superintendent at St Ives. We brought over the exploration manager from Aurelia. We think we have a really world-class team for a junior explorer, and we'll also be getting complemented by FMG's team in our exploration committee on our Mile project. So thank you for your time, and another exciting 12 months ahead for Magmatic.
Thanks.
Thank you very much, and thanks very much for hosting me and for such a fabulous event. Despite what it says on the screen, I'm not Daryl Edwards, the Chief Executive Officer of Bowen Coking Coal. Daryl is here. Daryl, put your hand up somewhere. Don't tell me he's abandoned me. He's up the back there, and Jen as well. So come and see him in the booth. If I skip any detail, he will be able to fill you in on all of that. We actually flipped a coin to see who would come up here, and I lost. But it was Daryl's coin, so I'm just not sure how many heads he had on that one, Daryl, but never mind. So look, I want to sort of introduce you to the Bowen Coking Coal story. I'll talk through some of the recent highlights, but maybe taking a step back, less than 2 years ago, we closed the acquisition of the Burton mine from New Hope. So New Hope had acquired it from Peabody, and they also sort of vended us the Lenton project as well. So it's quite a big complex. Historically, it was a very successful coking coal mine. So within the last 2 years, we opened the mine up. We had an official opening just probably earlier than this time last year. And since then, we've mined around 2 million tonnes of ROM coal. So it's been a pretty rapid startup. It hasn't been without its challenges, I can tell you. We had floods of a biblical proportion. We had the tail end of a plague, otherwise known as COVID-19. And we also had a swarm of locusts coming down from George Street in Brisbane and imposing on us the highest royalty regime in the world. We're from the government, we're here to help. But despite those significant challenges, we've sort of persevered. Last year was a reasonably tough year. Daryl had a full head of hair at the start of that year, I think, and he's now, looks like Kojak. We're persevering. That's what we do, I guess. We're big fans of coal. We're big fans of met coal. I think we're the only met coal producer on the schedule today. So last quarter was a big quarter. This quarter will probably be a bigger one, and it was big in the sense that we sort of had record production out of Burton. We also made our maiden EBITDA positive number, $11 million, which we're very proud of, and that was after paying over $19 million to the state for their royalties under their generous regime. That's all sort of heading in the right direction. I think when I say we're heading for steady state from sort of next quarter onwards, we'll be at steady state and our costs will come down significantly. So I'll talk through that. But costs here at $182 per tonne Aussies on the boat is within our guidance and down on the previous quarter. But our long-term goal, when I say long-term, for all of next financial year, we're targeting 135 to 145 Aussies. And that sounds like a decent cut, but it's actually just basically geometry and maths. And so as our strip ratio reduces, we have to shift less overburden to mine the same amount of coal, and that's what drives the economics of the mining costs. As well as that, last quarter we locked in forward sales with a bunch of very large steel companies, some of the biggest steel companies in the world. So all our met coal for next year, being from sort of April to March, the Japanese buying year is locked in now and forward sold or sold to the very largest steel mills in the world. We also improved our sales mix, so I'll come back to that, but we're sort of, as we ramp up, we're getting into more met coal, less thermal. So this is an overview of the complex that we acquired. You'll see some of the other mines around. We're in the heart of coal country in the northern Bowen Basin, so we've got Peabody, we've got Stanmore, which was a company myself and another couple of mates started in 2008 and listed. Fitzroy, BHP, Mitsubishi. So some of the biggest miners and some of the biggest mines in Queensland are our neighbours. The Burton mine is located there, as you can see it, and I think important to note that these are the pits we're mining at the moment, Ellensfield South, and we're going to head into Plumtree North shortly. We've also been mining, this was our starter pit down here at Broadmeadow East, so as well as buying the Burton complex in Lenton from New Hope, we bought Broadmeadow East from Peabody. So we sort of threaded that together. And there are shades there, I guess, of what we did at Stanmore with Isaac Plains. We bought Isaac Plains from Vale and Sumitomo, and we bought from Peabody the adjacent pit. So one of them had all coal, and one of them had the $300 million worth of infrastructure, dragline, wash plant, all the rest. So this is not a dissimilar deal. We threaded together a few things. This also comes with at least probably $400 million of infrastructure today, wash plant, haul road, offices, a fantastic camp, 350-person camp, basically everything we need to run a very major coal mining operation. And we bought it for about 10% of that number. So we also have picked up a number of other assets, and we're looking to run the sort of hub and spoke model, basically. So that centralised infrastructure here will service not only the assets such as the ones we're mining now, but then there's others that will come on through, like Lenton and Hillalong, which we're drilling up further north at the moment. So this is zoom into the pit that our current focus is the main driver of our operations at the moment, is the Ellensfield South pit. Yeah, so you can see here, this is the Leichhardt seam we're mining here, the Vermont seam underneath it, and it's a terrace mine. So we start at this end and we run through to there. At the end of this here, where the sort of clearing is completed, that's where we've got to jump the creek, and that's where we run to Plumtree North. So once we run into Plumtree North, we've got about another six to 7 years of mining there. All of this is at an average of 7-to-1 strip ratio, so very low cost mining as we get into our steady state. In fact, the remaining mine life on this particular pit, Ellensfield, before we jump that creek, will run through to June next year, and that's got a remaining strip ratio of 5-to-1, so incredibly low strip ratio, low cost. So I think I skipped a slide, but that was the Broadmeadow East pit, which was our starter pit we bought from Peabody. That's been very good to us. We've now parked that because we filled the first module of the wash plant with Ellensfield, and that was the goal, is to get it all out of one pit, one mining invoice, minimise costs. It's very close to the wash plant, and it basically can keep us going at that sort of roughly 2 million tonnes of product a year, which is our starting point. We can double that production, and we can spend a little bit of money on the wash plant to refurbish the second module, which we will do at some point in time. But at the moment, we're just focused on getting it a steady state and spitting out that cash. Overall, it's about a 5.5 million tonne. It's really a 6 million tonne operation. It's run for full years at 6 million tonnes, the wash plant in the past. So our capacity, our availability, so this is a measure of how, whether the wash plant's running well and is available or is down, so 94% extremely high. Utilisation 73, but in April I think we're up to 87 already, so it's heading in the right direction. So utilisation just means we haven't had the coal to feed it as we get towards steady state, but that's certainly sort of settling down now. Just a couple of trend lines here, so you can see the September, December and March quarters. You can see what's happened in the Burton complex with the ROM coal, the dark blue line, dark blue bar increasing. The second of those two sets of bars, the grey and light blue bar, demonstrates the product coal, and what you'll see there is that the product mix is switching, so more light blue, more met coal. As I say, we're about 57% in the last quarter. Will be our target 60, and we think we'll get there pretty soon. The second chart below that is our EBITDA performance. So we've gone from negatives as we've sort of been starting up and ramping up, and slight negative in the December quarter, and now we're into positive territory. So I think, and what really drives that number now is the strip ratio. That's what it is. I mean, the mining costs are what they are to shift the dirt, and so the less dirt we can shift for a tonne of coal, the better. And at the moment we're still sitting up at around sort of 9s and 10s, but that will come down to sort of 7s, and that will drop, a significant amount, proportionate amount out of our mining costs. So we did put some guidance out, which is probably unusual for a company in startup phase, but largely we've managed to hit it. We're a little bit above on CapEx, but we're a little bit at the lower end of the cash cost. So that 175 to 195 cash cost, I mean, that's competitive in the basin. I mean, if you look at our peers, they say, I think BHP the last 6 months was 193 Aussies, Peabody and Coronado similar or higher numbers. But the important thing is here, as we get to steady state, our costs will come down, and they are coming down. So we'll see 135 to 145 for next financial year from sort of 1 July on average. Production guidance we're meeting, and we're comfortable with that. And yeah, our target out of that first module, around that sort of 2.6 million tonnes of ROM, and up at about 1.8 million tonnes of product. That's the wash plant, so the end of it closest to you, the lights are on, that's the half that we refurbished. At the back end, we've stripped it all out, it's ready to go. It's only another, Darryl will correct me, but circa $30 million to get that going and double the capacity. So that is, it's a 5.5, 6 million tonne per annum plant, ROM feed, which will spit out, close enough to 4 million tonnes. So we're doing half of that at the moment, first module, and we don't have any immediate plans to expand it, but we will, pending the market and what the market dictates. As we, come back and strengthen our balance sheet as well, I think is important. So life of mine, about 14 years on those initial pits, Burton, Lenton, BME. There's more than that in the other ones, I'll demonstrate that shortly. But even the reserves we've defined to date, there's 14 years of mine life at that sort of single module current run rate, which is quite significant. So this just gives you another perspective. So we're Broadmeadow East, we've just parked at the moment, and we'll come back to that, but we can fill the wash plant out of Ellensfield South, so that is absolutely what we're doing at the moment. As I say, through to the end of 25 on Ellensfield South, comes to an end. That between now and then we've done the heavy lifting, so it's an average of 7:1 strip ratio, but what's remaining is 5:1, so we've shifted more dirt as we've got it started and overburden in advance. And then we skip into Plumtree North, which again, 7:1 strip ratio, great stuff, and so is Lenton. So we're out to 2030 and then beyond, still at that that strip ratio. Then the other stuff, Burton North is an old pit, Burton South is an old pit, which we think we can take another cut or two out of them. They're extremely high quality coke and coal. These were 12-metre seams, 80% yield, fantastic metallurgical coal, really very well desired around the steel mills around the world. And so we'll come back to those. They're higher strip ratio, so they're at the end, but I think, come back to supply and demand, but price in my head is only going one way longer term, just because we're not really building any more of these things and the demand continues to go up. So in terms of that, we are seeing forecasts of a significant structural shortfall in met coal coming by 2040. It's tight as a drum at the moment. You're seeing heading to the second half of this year forecasts, so it'll jump back up again to sort of 290 US. I remember when we started Stanmore Coal, the first time, like within months of that, the price hit 300 US and it stayed there for about a millisecond and then sort of came back down again. And this was a time when, if you got 50 or 60 bucks historically, you're doing quite well. Now that price has sat up, at or around that 250, 300 for the last few years. And that sort of recognises both that costs have sort of structurally shifted in the basin, but also just that demand continues to grow and we're just not making any more of this stuff and we're certainly not developing any more projects. So I think I'm invested in a bunch of different commodities. We've got Ballymore tomorrow afternoon at 3:30. They're going really well, gold, copper. But I think met coal has some particular characteristics because it's kind of on the nose from an ESG point of view. Nobody will invest in it. You can't get finance, you can't get insurance. But for those of us that are willing to go through that pain and actually get it done, it's a fantastic market to be in. And I'd also point out that you can't build a steel. We need to support our industry, support our communities, industrialise third world nations and frankly decarbonise without met coal. So it's quite an opportunity. I won't talk too much about that. I just want to point out one other thing, which is this is broad general coal. I think within sort of 5 k's of this room, people probably overall the view that coal is dead. Coal's yesterday's fuel. A couple of small facts, but 82% of our global energy, that's all energy, including not just electricity, is from coal, oil and gas, fossil fuels. At the top of this chart, you've got a few countries like America and Europe sort of battling each other to sort of, in my opinion, destroy their economies and decarbonise as quickly as they can. But it doesn't really matter. It's a rounding area. You've got 70% of coal market is India and China. That's what they're doing. You can see the blue chart there. So that's just the reality of life for us. I won't dwell on this. We just put another director on, Malte. He's a lovely German bloke, actually taller than me, as it turns out. So, look, just in summary, we are becoming a low-cost producer. We'll be around for a long time. We are active. We're acquisitive. At the right time. We're now rebuilding from last year's kind of series of setbacks, but we're doing really well. And the team, led by Darryl and Jen at the back, are doing a fantastic job. So, we think the met coal market is extremely positive and buoyant, not just in the short term, but in the long term. We're talking to our fellow coal companies about coming together and actually telling the story of coal. You'll hear more about that before long, a new organisation coming through. We've got a great team, great set of assets, strong partners, Sumitomo and Formosa in Taiwan at an asset level. So, yeah, exciting stuff. Just come and see us, drop in and say good day, and we'll take you through a bit more of the detail. Thank you.